Okay, welcome, guys. How are you doing today? Good afternoon, or rather, I should say good morning, good afternoon, or good evening, depending on where you are connected to us from. It's a beautiful Sunday. Yes, indeed, it's a beautiful Sunday, and the market isn't opened yet. The market is not open yet. Well, at least for majority of the instruments, because during the weekend you can still trade the likes of the cryptocurrencies and the volatility index, but we are here to focus on the currencies, the major currency pairs like the Euro USD, Pound USD, and of course using the DXY, using the USD as a guide. So once again, thank you guys for joining us. It is indeed a good one having you here. First of all, how was trading this week for you? How was trading this week for you? This week was rather an explosive one, right? And I must say so myself, based on the market activities. Here is the Euro USD. I can see it was just a runner. And that's why we said it was explosive. So the runner, as we just had this massive uptrend, right? In this uptrend, we had two opportunities, one for buying and also one for selling. But of course, if you are a trend trader, then you know you should be doing what? You should be looking for buying opportunities. Now, today, what we want to achieve is market review. Most traders, after a trading week, they don't go back to check what happened that particular week based on the losses they had, the winners they had, what they could have done to improve the trading during that period, and so on. So we want to do what? We want to discuss the market for this week that just passed. And today being Sunday, we have a new week that is already around the corner. Well, the week is already here, the new week is already here. But when we say around the corner, the market is yet to open. And of course, we can be sure that in just a few hours, market will kick off. So what are your plans when the market kicks off? How was trading last week? Did you have winners? Did you have losers? Was it a break-even week for you, or you didn't trade? How were you able to manage the high impact news that we had last week? Because yes, indeed, we had a couple last week. And of course, Friday was the big one, the non-farm payroll. We expected much more from the non-farm payroll, as a matter of fact, but the non-farm payroll, well, it is the non-farm payroll. It did its thing quite all right, but not what we were expecting. And I'm going to explain, right? Speaking of the non-farm payroll, here is where we have the news from last week. And as you can see, right from Monday all the way down to Friday, we had some high impact news for the USD. Monday, Tuesday, Wednesday. Only Thursday we didn't have high impact news for the dollar. But then on Friday was what? Friday was a non-farm payroll, right? So the market was rather explosive last week, right? And then we can tell from the charts because for the DXY, which happens to be the USD index, which focuses on the USD. Now, this USD, based on the chart, can easily help you with the directional bias for the Euro USD, Pound USD, and a few other major currency pairs, even with the gold. But the only thing now is that not all the major currency pairs move exactly like the DXY. The best correlated currency pair, the best correlated major currency pair happens to be the Euro USD, which simply means if the DXY is going up, you should expect the Euro USD to also be going down. And if the DXY is going down, then you should be expecting the Euro USD to be going up, right? So with that said, let us do what? Let us dive in quickly and let's look at the DXY. Because we've been talking about the USD. Let's look at the DXY and let's try to break it down based on last week's happenings. And then from last week's happenings, we'll try to look at the remaining, like the Euro USD, Pound USD. And by the way, if you guys have any questions, if you have any questions based on what happened to you last week, or based on the news, or which happens to be the fundamentals, or based on the technicals, or based on anything, feel free to drop your question and then we'll look at them together, right? And even if you have questions based on market analysis for this coming week, feel free to ask your questions as well. In this coming week, from the 9th of July all the way to the 11th of July, for 3 days, we're going to be talking about the prop firm trading. A lot of people are going into the prop firm, but they do not know what the prop firm is. They don't know the advantage, the disadvantage of the prop firm. The prop firm is good. You just have to be careful with it because it's also a way that the prop firm and even brokers now, brokers are also, converting themselves to a sort of prop firm. So we'll be breaking down the prop firm, what it is, and of course, how to take advantage. It's all trading at the end of the day. Once you understand trading, you could go into any prop firm, you could trade your own private account. You can even become a fund manager under the broker platform, under the PAM or MAM, right? Meaning that you're going to be indirectly trading the funds of other traders. But we'll get into that right from Tuesday, the 9th of July. Today is strictly for the market review based on what happened last week, right? So thank you guys for joining. Thank you. So don't forget, if you have any questions, feel free to ask. So now, this is the USD index, the DXY, as you can see, USD index, and also here DXY. And we're looking at this from the 30 minutes time frame. 30 minutes time frame. This 30 minutes time frame, we can clearly see what? We can clearly see as the market dropped heavily in this manner. You remember we looked at the Euro USD not too long ago, where the Euro USD was appreciating, right? But now you can see that this DXY is the one going down. And that's what we said, they tend to move in the opposite directions, right? So let's quickly break down this using support and resistance. It is the price action. I repeat, this is the price action, which happens to be the behavior of price, the movement of price, the trend of price. It is that price trend that helps us to draw up our support and resistance. Here, support area, here, resistance area. And then price did its thing here, pushed higher. Here was resistance, also acted as resistance here. This place that we called resistance after it broke, after it broke over here to the upside, it was supposed to act as support. So you can see it got scared, didn't quite get there, got here to this point here, acted as support. But then look at what happened. Now, this is in the course of last week, and that's why we're breaking down the DXY's movement. That movement that we just mentioned is the price action, right? The movement that we just mentioned is the price action. So once you understand this price action, it is very, very important for us to understand what is going on. Once you understand the price action, the movement, the direction, the trend, it is very important for us to understand what is happening. And then moving on. Now you can see from what we are doing here, we are showing you the reasons why price bounced, price moved in this particular manner. So once you understand the price movement, once you understand the price action, trust me, your trading is going to catapult to what? It's going to catapult to the next level. You're going to have that exponential movement. And trust me, I know what I'm saying. Because after a while of, that is years and years ago, after a while of trading with indicators, having moving averages, Bollinger Bands, RSI, MACD, and so many indicators slapped on my chart, I decided to do what? I decided to remove all the indicators. Why? Because whether you put indicators or you don't put indicators, price is still going to move regardless. That simply means that it is not the indicators that is moving the price. Price is being moved by something else. Price is being moved by the forces of supply and demand. I repeat, price is being moved by the forces of supply and demand. So based on this supply and demand, it is now a thing of what? It is now a thing of understanding the areas, support resistance area that we have just mapped out. Once again, this was support, here resistance, and when it broke to the upside, turned to support, here turned to resistance, and acted as resistance again. Came back to this point of support, you can see, got scared, but came out here, bounced off it, and pushed higher. But it did not get to this resistance. Whenever price bounces from an area of support, like this example here, when it bounces off in this manner and doesn't get to this point, that simply means what? That means that the buyers are not strong enough. They're not strong enough to push price back to this resistance. And then what happened? It broke, it went down, broke that support, and then played around the resistance here. As it played around the resistance, look at what happened. It went down, got to the support, got to the support here, and broke the support to the downside. As it broke support to the downside, the other side has now turned to resistance. And then look at what happened. From here, it pushed higher back to the area, back to the area of what? Back to the area of resistance. So this would have been a wonderful place to jump in. I'm going to show you something. I'm going to show you why I wasn't able to get this trade based on the Euro USD. Don't forget, we're looking at the DXY. We're looking at the DXY, the USD index, and we're using it to relate to what happened in this previous week that passed, looking at the trades taken, the trades not taken, looking at the general price flow. So that once you understand what happened last week, it will help you for the coming week, right? And the market is going to be opening within a few hours, probably about 8-9 hours thereabout. So I'm sure you guys are ready. But don't forget, if you have any questions, feel free to ask. We are simply discussing what happened last week in the market. I don't know whether you guys that are here, you placed trades, you had losses, or you even crashed your account. Trust me, there are traders that are crashing their account every week. So I hope you are not part of them. So if you are here, thank you for joining. You can just indicate by putting something in the comment section. If you have any questions whatsoever, let us know. If you want us to look at any instrument, any particular instrument, even if it is one that I do not trade, because it is all price action, it's all price movement. Based on the price movement, we'll be able to break it down and be able to look for opportunities going into the next week. Or even if you are in a trade that is not going too well, still let us know, and then we can discuss it and see what we can, make out of it. So quickly now, on this particular day here, on this particular day over here, the market pulled back to this resistance and then dropped nicely. And this is for the DXY. But looking at this, if we move over to the Euro USD, on this particular day, let me just put a marker there. I'm just going to put this line here, and I'm going to leave it here. So you see that on this particular day, we didn't get an entry for this reason. I'm going to show you, right? The market did not quite get to where we wanted it to get for the Euro USD for us to enter on a buy. Now look at it, the line is still there. As the line is still there, based on our support and resistance, you can see here was former resistance. When the market now broke over here, it now turned to support. So we were expecting that based on this pullback here, this is now resistance, right? We use the highs and the lows to determine support and resistance. Now, based on this movement to the downside, we were expecting price to hit this area of support. Price should get to this area of support, and then we will now go for buying positions and take it up. But look at where it got to. It just got shy of that area and pushed higher. Remember, we just showed you the DXY. The price pulled back to that nice area. It pulled back to that nice area of resistance. But the Euro USD didn't quite get to our own area. You can see over here, this was resistance from this point over here, but it didn't quite get there. If not, we would have been coasting nicely on this Euro USD 30 minutes time frame. You can also be seen clearly on the hourly time frame. Would have been coasting nicely over here, and it would have taken the price up in this manner. At least to this resistance would have made this much amount of pips, and then it even broke out, right? So this is what happened based on last week's price action. Price action. You hear us mention price action like 1,000,001 times. And then even based on the non-farm payroll news that we had on Friday, here was the activities of Friday, right? We did a live non-farm payroll on Friday discussing the possible outcomes. Based on what we had, we were expecting, as the market was in this area here on Friday, because we said to buy over here to get to a profit of this place here, the stop loss and take profit would have been way too tight. It would have been about 1 to 1, meaning that one risk to one reward, which is not a good trade. So we didn't look for buy opportunities here, but rather we're expecting the market to break down and then rush to this area here, back to where we could have entered. Because if we had gotten the market, meaning that NFP, we had a massive candles drop all the way here, it should have been a good place at the support area to look for buy opportunities and even take it higher to this point here. But the market had other plans from here. It tried to look at this wick. This is a massive wick, this thread. It tried to come down, which was obviously in two parts. It deceived a lot of people thinking it was going to come down to this point here, but never did. But then those that did what? Those that rushed to buy. Remember we said we didn't like this area of buying because it was too tight and your stop loss would have been lower. But that means that a lot of people on Friday would have gotten their stop loss taken out. And you know when your stop loss is taken out in this manner, traders start to call it things like stop hunting. Stop hunting. Trust me, stop hunting. There is no such thing as stop hunting. Well, there is quite all right. But once you know where to put your stop loss, trust me, you will not be having issues. And then you'll not be blaming it on the broker all the time. Right? And that is the truth, the whole truth, and nothing but the truth. So this is what we had over here in this area of the non-farm payroll. So we did not get an entry here because the price didn't pull back to this area. I'm going to do something for you guys. I'm going to clean this up. I'm going to still put a line over here because we're going to use this to check on the GBP USD. Remember, this was the area that we said we wanted to enter to buy on the Euro USD. We never got there. And we're saying that because of the DXY. This was the DXY, the same area where the price got some pullback, but it didn't give us that on the Euro USD. Now let's look at the GBP USD. So you see that everything was in order, but the market had other plans. This same line, this is where we're looking out for. You can see this area was an area of resistance and then broke out, was now going to act as support, but it never pulled back to this area. It never pulled back to this area. This GBP USD was even worse because it just got halfway. Even the Euro USD got closer. So we didn't have any trade opportunities. And these kind of things tend to happen. And this is why you should always conduct your market review. I repeat, always conduct your market review. Guys, if you want us to do any market review, you want us to look at what happened last week based on any instrument of choice, let us know. Put it up in the comment section and then we will talk about it, right? This is not a training, this is a review. We're going to be having a training on the Prop Firm workshop, on the Prop Firm challenge, how to pass the Prop Firm from Tuesday, Wednesday, and Thursday. And if you are also in the Telegram community, right, then we tend to do what? We tend to have discussions Mondays to Fridays, and we discuss on anything of your choice. You can ask a question, we answer, you can drop your charts to look at the charts together, and that is what the community is for. The community is a place to build traders, is to strengthen traders. When we do trading is rather boring. But when we trade together in a sense where we are looking at the market live, we are waiting for the news to drop, the high impact news to drop at the particular time. I'm not saying trading news is not the way to go. I'm not a person that waits for the news to come out and then we trade it. But what I'm trying to say is when we are together, right, they say that two good heads are better than one. When we're together in the midst of other traders, trust me, it builds confidence in yourself. It builds confidence in everybody. And before you know it, we're coasting, we're trading, we're moving the market nicely, or rather, we're moving with the market nicely. We can't move the market, but we're moving with the market nicely. Now, I'm going to talk about gold. We're going to look at gold, right? Guys, if you have any questions, don't forget to ask. We will be rounding up in a few minutes. We try as much as possible not to take way too long of our time. You can see the gold also followed that same pattern. Here was resistance, resistance, broke out and supposed to act as support, but it never pulled back to this area. But instead, here there was resistance, as you can see resistance. It broke out at this point over here, pushed higher, and then the market closed here on Friday, meaning that going into this new week, I repeat, going into this new week, and that's why we are saying market review for what happened last week, and then also the trading opportunities for this new week. So the trading opportunities for this new week that we're about entering, right, is over here, where we're expecting the market to pull back to this area of support, and then this should be the area that we should be looking for buy opportunities to push the market back up to this area. Now, I love this one. Why? Because when you enter over here, your stop loss might probably be somewhere here. Your take profit will be at this highs over here of the resistance. Now, you can see that the risk to reward ratio is what? The risk to reward ratio is actually a good one. I repeat, the risk to reward ratio is a good one. So this might probably be 1 to 4 if I just eyeball it, 1 to 4 or 1 to 5, thereabout. And who knows, this new week, it might even break and push higher, giving more profit at the end of the day. But this is what we have. And this is how you are going to be picking your trades. We're expecting this one to pull back here. If you had pulled back here, entry here to this resistance here would have been a good one for take profits. So always make sure that your stop loss is like this length, and then your take profit is much bigger. And this will help you at the end of the day. The risk to reward ratio, I tell traders that the risk to reward ratio is the final piece of the puzzle, right? Meaning that when you place trades, your reward should always, always, always be greater than your risk. Your reward should always be greater than your risk. Okay, so this is for gold, the shiny metal, right? The precious metal, gold. Now we're going to quickly look at Bitcoin, and then we're going to wrap up. Bitcoin, we're able to get an opportunity on Bitcoin, and I'm going to show you what we did with the Bitcoin, even though it was a counter trend trade. And if you check the recorded videos from during the week where we did analysis on Bitcoin, you'll notice that we said Bitcoin from where it had dropped down to over here, we're expecting it to pull back to this area, and maybe even this area. And that's why we mentioned TP1, TP2, and TP3. You can see the Bitcoin is still active now. This is the trading view. So trading view now, you have the Bitcoin. Remember we said you can trade the cryptos and some other instruments as well during the weekend, right? So we're able to get an entry to buy from this lows, and it got to TP1, TP2, didn't get to TP3, and then it has been having this sideways action here. This was a rising flag pattern, which obeyed the pattern, and then it dropped. And so it is still playing around here, still around the TP2. So worst case, you can take your final profit at TP2 if you're able to take this particular trade from last week, right? So this was just how our own market review was for this week that passed. And if you look, there are opportunities. There are always opportunities around the corner. Trust me, all you have to do is to be patient. All you have to do is to wait for the market to present itself to you, wait for the market opportunities to present itself to you, whether it is on majors, whether it is on cryptos, whether it is on stocks, whatever you are trading. Trust me, there are always opportunities around the corner. And then we do market review to identify those opportunities just in case we miss them. But if you miss the opportunities and then you are able to see them during your market review, do not be angry. The only good thing now is that it's going to help you to identify those things going into the new week. And that's why trading, we always say trading is all about the patterns. I repeat, trading is all about the patterns, right? It's the patterns that we trade that helps us to identify and to see them over and over and over again. That's where you hear people talk about trade patterns or chart patterns. You hear people talk about chart patterns where you have like triangles, like wedges. You have some flag patterns. You could even have people talk about the head and shoulders in this manner, where here is the left shoulder, here's the head, and then the right shoulder. All these patterns are tradable. Trust me, trading is strictly all about patterns, 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 patterns. And these patterns is brought about by price action. Price action is king. Don't let anybody deceive you. It's all about price action, right? Of recent, for some years now, and it's even getting hotter, people have been talking about the best trading strategy out there. Is it MS? Is it MC? Is it the ICT? Is it the ABC? Is it the PPC? Or I was about to say PDP. For those in Nigeria, they know what PDP is, APC is, right? But I tell people that the best is what? The best is PA, price action, because it is this PA price action that gives birth to all of these trading strategies. Look it up. Price action is king. Price action is what helps people to see the market in a particular way, and then they come up with their own strategy. Anybody can look at the market. If it's different from what people are talking about now, explain it and then give it your own name. You can call it your own Tolu strategy or whatever, right? So this is what trading is all about, and this is how we should be approaching the market, right? Approach the market based on the patterns, approach the market based on what you can see. And then also, it will help you to do what? It will help you to improve in the next week. If you are here, you're listening to me now live, or you watch this on a replay, I have a little assignment for you. Trust me, this is going to help you out tremendously. I did this myself, the assignment, and I passed. Because most people don't want to make money immediately. They want to make $1 million overnight. And I tell traders, it is not it is not a fast, what do you call that again? It's not a get rich overnight scheme. So take your time. And based on that, I tell traders, look, for this new week, don't trade. And then they say, what do you mean don't trade? Don't place any trade, whether it's on a demo or it's on a live. And you know what that's going to do for you? It's going to first of all help your emotions to be balanced. Because most times this is when you're in a trade or when you are anticipating a trade, when you are, anxious anticipation, anxious in a trade for the outcome of that trade or whatever. It's when you are anxious, then your emotions takes over and then you're all over the place. But if you say, this week I'm not going to trade, it doesn't mean you're not going to get opportunities the following week, the next month, the next year. You will get opportunities. But what you do now will determine how you approach the market going into the future. So just little assignment for you. You're listening to me here live or you're listening to me on a replay. Don't place any trade this week. It is for your emotion's sake. What you should be doing is mapping out your charts based on the patterns. Map out this area as your support, map out this area as your resistance, and then do what? Let the market play out. If it plays out according to how you mapped it out, what is that going to do for you? Think about it. It's going to build your confidence. It's going to make you to understand that, oh, so this thing I did, mapping out my support, my resistance, my head and shoulders, my wedge, my triangle channels, and so on, mapping out all these, my patterns, because that is what price action is. Mapping out everything. Price did what? Price obeyed what I did. You can even do back testing. You can back test the market. Go back to last year, go back to last month, go back to 2 years, 3 years, and back test. Take your time this week. Don't trade. Take your time and do a whole lot of back testing. Do forward testing as well. Don't trade. Just look at the market. Map out. Trust me, I did this for myself years ago, and it helped to improve exponentially. It helped me based on my confidence, helped me based on my emotions. A lot of traders are having issues when it comes to the psychology of trading. When they're having losses, the emotion kicks in. They want more, greed. When they're having losses, when they're having winners, their emotions kicks in. They want more. Greed, Oliver Twist. When they're having losses, fear kicks in. And that is why in this business, fear and greed plays a big role, plays a big part in what we do here, right? Now it is 2 p.m. West African time, it is 2 p.m. UK time, and we're going to be rounding up right now. We try as much as possible not to take our sessions too lengthy so that those that are coming on a replay, they can easily watch it even more than once and then be able to ask questions or prepare themselves down for the new week. So for the new week, first major thing that you need to do is to pop up the calendar, look at what we have for the new week. You can see Monday, July 8th, we don't have any high impact news. July 9th, we have high impact news for just the USD. This doesn't mean that we don't have any other news. We're able to filter and turn off the medium, the low, and the non-impact news. So we filtered all of them to focus majorly on the high impact news. You know, they have been having elections as well. Today is elections for the French parliamentary elections. We already know that there is a new prime minister for UK, and that's from the Labour Party, right? So obviously things might probably change a bit in the UK, and we should see some changes as well for the pound, so the direction of the pound GBP. We might have some volatility here and there, who knows? So Monday, Tuesday, Wednesday, Thursday, and Friday, if you look very well, from Tuesday we have for the USD, the news for the USD, Wednesday USD, Thursday, guys, let me point this out before we round up. Thursday for the USD, guys, please, CPI. CPI usually comes after the NFP news. CPI tends to be what? Tends to be explosive. So you need to pay attention to this period on Thursday, right? Because it could easily be dangerous. So if you are new, if you're totally new here, you can also go over to the school. We have a school, a training school. When you scroll down, you have free beginners course that you can watch and help you to understand all the fundamentals, technicals, how to even use the platform, risk management, psychology, everything is inside here for free. You can watch it to bring you up to speed if you are a beginner, you are new. You can open a demo account, join us in the Telegram community, and just make use of all the information. Your YouTube channel, guys, as you are here on the YouTube, don't forget to hit the subscribe button, turn on the notification bell. Use the position size calculator for your risk management. You have a lot of information here that can help you out at the end of the day. You can contact us and so on. So we want to say thank you, thank you, thank you for joining us. We are rounding up now. Don't forget, have any questions now, have any questions later, feel free to reach out to us and we would help you out. This week, Tuesday, the 9th of July to the 11th of July, for 3 days, we're going to be talking about the prop firm trading, prop firm challenge. A lot of people are going into the prop firm challenge, but they cannot pass the challenge for one reason or the other, right? And they don't pass the challenge, what happens? They lose their subscription fee and they end up going again and going again. Before you know it, you will probably have spent a lot of money on the prop firm challenge and you're not passing it. So we'll talk about that. We'll look at a few things with respect to how to go into the prop firm, how to pass it in a timely manner, and how to scale up. Okay, but thank you guys. Thank you, thank you, thank you. Enjoy the rest of your Sunday. Get some rest. Get ready for tomorrow, your 9 to 5, your hustle and bustle, whatever the case might be, you're a student or whatever. Get ready for that from tomorrow. So thank you guys. We are rounding up now. Reach out to us if you have any questions later. Thank you. Goodbye and God bless. Cheers.